What's up, everybody? It's Aaron, and I'm super excited to have this chat with you today because if you've been watching the crypto markets, you know that it's been getting hit super hard again. And this time it wasn't because of Elon. So the reason that the crypto markets have been going down in the last 4 days is because primarily of China's announcement that they were going to ban Bitcoin mining, and they're actually taking action on it and going through all the buildings that are in the right provinces that are consuming a lot of power to actually shut down the miners. And second, they just announced today a meeting of all the financial institutions that had to come in for a meeting and be told that they were no longer allowed to have their customers trade in virtual currencies. So these two things are causing a lot of fear, uncertainty, and doubt in the marketplace, but in this video, I'm actually going to show you why I think it's going to be a net win for all the other countries that choose to stay involved in cryptocurrency. So as China pushes everything out of the country regarding crypto so that they can probably introduce their own virtual currency in its place, that it's going to have a lot of effects of other countries retaining more power over these currencies, and it's going to keep enhancing the long life of crypto in general rather than kill it. So go ahead, smash that like button, and when you do, it allows more people to see this video. This is important because when they see these headlines come across their screen, we want people to have the education and have the insights of what's really going on so they don't freak out and do something financially that they would regret later. So go ahead, hit that like button, and let's get started. So this all started June 18th when Bloomberg reported that there's a hydro-rich Chinese city said to clamp down on crypto mining. So a Chinese city with abundant hydropower is said to have begun a sweeping clampdown on crypto mining firms this week. And the Yan government official has told at least one Bitcoin miner that the city has promised to root out all Bitcoin and Ether mining operations within a year. Within a year, I bet. It's a typo. So authorities of Yan, located in the southwestern province of Sichuan, pledged at a Thursday meeting to screen and rectify all Bitcoin mining firms within its jurisdiction. Some miners were notified by their power suppliers that all plants in their area will be closed until further notice for self-inspections. Surprise self-inspection, we're closing, no more power for you. Yeah, many mines in Sichuan were closed as of Sunday. The Communist Party-backed Global Times newspaper reported, without saying where it got the information. The clampdown means that 90% of the country's Bitcoin mining capacity will be shut down, at least for the short term, the paper said. So this means that suddenly, as mentioned earlier, pretty much all of China's computing power for the Bitcoin network and other crypto networks is just poof, gone in blink of an eye. And what we know that affects 2/3 of the entire world's computing power for the Bitcoin network, because about 65% of the world's Bitcoin mining took place in China as of April 2020. So the second thing that China has done is they brought all the top bankers in the entire country in. This is the People's Bank of China, which is the regulator there of all the financial institutions. They brought everybody in to reiterate and remind them that there is a ban against allowing customers to use their accounts to trade crypto or be involved in virtual currency transactions. So we see here China calls top banks to a meeting to reinforce crypto ban. Representatives from a whole litany of top Chinese banks and even Alipay were reminded of rules that prohibit Chinese banks from engaging in crypto-related transactions. And that was said today and was a big reason why the market took a hit. Latest developments is a sign that China will do whatever it takes to close any loopholes left in crypto trading. Because in May, China's State Council, the country's cabinet, called for a renewed crackdown on Bitcoin mining and trading activities. China has long-standing rules that bar banks from offering crypto-related services. However, in the past few years, individuals have moved to trade the digital coins on over-the-counter platforms and even offshore exchanges. I want to jump to another quick article that kind of shows how that even worked. So here on the CNBC article, it says China banned local cryptocurrency exchanges in 2017, forcing them to move offshore, but that didn't stop people from buying and selling digital coins. It just made it a little bit more complex to trade crypto. So Chinese traders would have to move their Chinese yuan to a platform to buy crypto. That would be done via a payment service like Alipay or bank account. So the People's Bank of China's latest reminder to financial institutions could be looking to stamp this out further. The People's Bank of China has said that crypto activities disrupt financial order and also breed risks of criminal activities like illegal cross-border asset transfers and money laundering. Financial companies have pledged to step up inspections into crypto activity and close related accounts. They won't offer account opening, clearing, or settlement to assist crypto trading, they said. This is a big change, I mean, it's more of a continuation of what has already been announced, because China has already been banning crypto mining in announcements a few months ago, back in 2017 when they banned exchanges. But they were, really coming in and targeting just today an all-out ban, like no more. It has to stop. So this is, I guess, the end of crypto in China, as it seems. So what has all this news coming out of China done to the price of crypto? Well, it's knocked it down close to that key $30,000 level. Let's look at what Bloomberg has had to say about the price range that they see it trading in. We're most likely going to continue to trade within the $30,000 to $40,000 range, and hopefully $30,000 will hold as the low of the year, says Antony Trenchev, co-founder of crypto lender Nexo in London. If not, we should revisit 25,000 and even 20,000 before the next big leg up. So that's pretty crazy, because when Elon crashed the crypto market a little over a month ago, the price went all the way to 30,000, and it just pierced it briefly for a quick second. But it basically stayed above 30,000. So if all this activity and news coming out of China can make it go below 30,000, that's concerning. But I think it would actually turn into, unless something else crazy happens, a potential buying opportunity. So here's where I see China's decision to push crypto out of the country as a net benefit for other countries, for instance, the US. We see that China is kicking out so many crypto miners that account for up to 65% of the mining capacity of the entire world in Bitcoin. And where are they headed? Good old Texas. So in CNBC, it says that most of the miners who've been kicked out could be headed to Texas. So China has long been home to more than half the world's Bitcoin miners, but now Beijing wants them out ASAP. And this is setting off what's been dubbed in crypto circles as the Great Mining Migration. This exodus is underway now, and it would be a game changer for Texas. Mining is energy-intensive process which both creates new coins and maintains a log of all transactions of existing digital tokens. Despite a lack of reserves that caused days-long blackouts last winter, Texas often has some of the world's lowest energy prices, and its share of renewables is growing over time, with 20% of its power coming from wind as of 2019. It has a deregulated power grid that lets customers choose between power providers, and crucially, its political leaders are very pro-crypto. So those are basically dream conditions for a miner looking for kind, welcome, and cheap energy sources. So what makes Texas great for a crypto miner to go to? Well, they're known for cheap electricity. And the whole renewables argument was important in the whole Bitcoin mining fiasco that Elon brought up, because it's so power intensive to do the mining processes. And China had a lot of hydroelectric power. Yeah, there's a lot of coal that was powering the Bitcoin mines, but there's also a lot of hydroelectric power. And so when the Bitcoin miners move out, wherever they go, will it have an equal proportion of renewable energy sources? And that is going to be one of the challenges. But Texas has a shot here. if we look on the Comptroller of Texas's website about their electrical grid, we see that the sources of generation of fuel are about half as natural gas, which again is a fossil fuel and isn't great, but it's not as bad as coal. They got 20% coal and 20% wind. That's super impressive. 10.8% nuclear, and then just above 1% solar. So Texas is, some semblance of renewable energy, and it could be helpful. But I think, again, some of the other issues are getting those Bitcoin mining operations set up, because they got to ship everything over from China, and there may be some logistical delays there, giving all the delays of the last year coming into play. Can they get a shipping container? Is there availability around that? And then how long will it take to get to wherever they go, say for instance Texas? And then of course building a facility, all that co-location space is probably already taken up or is going at a pretty high rate, just because everyone wanting to mine crypto. And then of course if they have to build something new, we all know in the US there's a lot of permitting processes to go through to get something done. So I think what's going to happen is that a lot of capacity is going to come offline, the computing power, the hash rate of the Bitcoin network, which means that some of the other miners that don't have to move out of China because they're not in China, they may actually get a freebie and become more profitable because they take up the capacity. But I wonder what it's going to do to liquidity of trading crypto, trading Bitcoin, when you have, half, 2/3 offline for 3 months, 6 months, 9 months. It's going to be a very interesting summer with crypto. The other interesting thing about locating a crypto miner or Bitcoin mining operation in Texas because of the power grid is Texas has purposely set up their entire power grid to be independent of the rest of the US. And they want to do that because they don't want federal regulation to touch their power grid. And this is really interesting. And yes, it was unfortunate that was kind of the reason that the winter storm a few months ago was so devastating, because they couldn't access the backup power or connecting via other grids and getting sourced from another region to stave off the power losses that they had because they weren't connected, and that was by design. In this case though, if the US government ever decides to crack down further on crypto, federal override state a lot, but could Texas have some advantage from a legal or regulatory standpoint with the fact that their grid cannot be touched by the federal government? And so let's take a look at this. Fact check, why does Texas have its own power grid? This is a claim that the Texas power grid is not part of the US power grid because they want to avoid federal regulation. And on MSN they said this is true. An aversion to federal regulation was one of the main reasons that Texas energy companies opted for a power grid that didn't cross state lines. Texas has resisted regulation in major court cases. So ever since the 1930s, Texas energy companies opted for a power grid that did not cross state lines to prevent federal regulators from interfering in electrical sales. So they basically have the electric Alamo. And since federal regulators had jurisdiction only over interstate sales, the gambit prevented them from subjecting Texas electrical companies to any rules. So going forward, could this help any crypto miner avoid some type of regulation or scrutiny should the US government try to do to a miner what China has just done to a miner? So big changes coming and already here for Bitcoin and other cryptocurrencies, given China, which is up until this weekend home to the most amount of Bitcoin miners in the world. So that diaspora of miners being pushed out, where are they going to land? Texas is a really great option for them to go, and it seems like a lot of capacity is going to end up there. The key question is, will that capacity come online quick enough to keep up the rate of transactions that everyone in the world trading Bitcoin is used to without it affecting the price further? Because we're already teetering on a key technical level right around that $30,000, $31,000, $32,000 mark. And if it breaks below 30, people are saying it's going to drop even more before it goes up again. So let me know your thoughts in the comments. Hit that like button and have this video shown to more people so they can get the information that they need and understand what's really happening behind the headlines. And I'll see you next time.